This budget, the unresolved budget amendments. Now, lawmakers were meant to meet yesterday. Well, they did say they would have a full house, both the upper and the lower chambers. But during the break, we were talking, and you did say that perhaps what the recent development, the state of emergency, may have overtaken that particular event. But for you, let me hear your own thoughts on it. Last week, I'm sure you're aware of that interview we had with the finance minister, where she was pretty much frustrated about the current development, where the document is still untouched by the lawmakers 2 months after the supplementary one was sent to them. And obviously, they have some issues that they disagree with. Some of them even claim that it was a brand new document sent to them. They won't touch it, and they might even go back, the way it came. You could just sense, her sense of frustration. She talked about salaries, that some salaries may not be paid because 32 billion was taken out. So obviously, one key factor here is the issue of compromise. Both parties are still not able to find that compromise. Yes. Where else could they be looking at? What are you? No,
they've got a compromise. You see, the democratic principles and culture is going to grow. We have only 15 years or so of this new democratic experiment. So people have to get used to consensus, which means that the executive will have to give in on some things, the legislators will have to give in on some things. But what is paramount is that what is important to this economy? Because an economic crisis will mean that both the executive and the legislature will go down, and we don't want that. So first of all, they have to prioritize that, and then see what can be given up and trade off. So basically, aligning the interests of the executive with that of the legislature, because all of them are representing Nigeria. The executive are appointed and elected under the presidential ticket. The legislators are elected directly by the constituencies. So if you address constituency interests to the detriment of the broad economy, those constituencies will not exist. So it's a question of communication, alignment, and maturity. Because these are leaders.
I'm not sure we've seen much of that, because this is what we saw with the U.S. lawmakers 2 years ago, but went bickering back and forth. And then
Cliff and all that. But that's natural.
Standard & Poor's came in, and the country was downgraded over that.
Absolutely.
So we saw politics taking the front burner. And yes, you talked about both sides they both know what's at stake. But do they really know that? Because we're seeing more. It seems like we're seeing more politics taking over here.
If there was maturity, now you talk about a budget. Now you have this emergency, and you have a political crisis. So the first thing to do is that once the country is facing a threat to its national security, all economic issues, you've got to bridge that gap immediately. People have to show maturity and leadership. You have to unite behind the flag. So that's what this should be at this time. So that there's patriotism and leadership, opposition and pro-government, everybody comes together. What is in the best interest? And there must be maturity, and there must be direction from the top. That is what's important.
Well, you're obviously confident that they will find that elusive compromise.
They will.
At the end of the day.
But the alternative is a apocalypse. We don't want that.
That's what they would face if they.
Because that's the truth.
Oh,
and if we don't know it, then that will be unfortunate. Then we are not ready. We are not qualified to be leaders in any form, either in the legislature or even in the executive, for that matter.
Let's talk about another key market event that's going to happen next week. The Monetary Policy Committee, the third for the year, I suppose. MPR, monetary policy rate, still at 12%. We're looking at very good macroeconomic indicators at this time. Inflation for March now at 8.6%. Forex reserves at a little over 48 billion. Exchange rate has been stable at the official market. So, good numbers so far. What are your expectations?
I expect that what we call the return to rationality. The MPR has been basically a subject of sentiment and emotion. But economics is a science of scarcity and choice. And we go back to what they call rational expectations. So I expect that if, on one hand, there are the growth objectives of the country, which are led by the fiscal authorities, but also the monetary authorities have to ensure that there's growth within a stable environment. I suspect that the Central Bank Committee, which made up of so many people, 3 of the people who voted last time were from the academia. The managers of the central bank themselves all voted as a group, and some of the businessmen voted all because of their fears that there are still risks, right? Those risks exist, and there will always be. There's never a perfect time. But what you need to do is to start showing a directional shift. The directional shift, even if you did 25 basis points, would help to bring down the rates. Or even if you didn't touch the rates, you reduce the what they call the cash reserve ratio requirement, And that throws in more liquidity in the system. In any case, the market rates have diverged from the policy rate over the past 3 months. Over 6 trillion naira has been mopped up in the last 2 months. Right now, in the last 5 months. However, rates, if you do an arithmetical regression, that should mean that rates should have gone up by almost 2 or 3%, but rates have actually stayed the same and may probably come down a little bit, which means that the markets actually expect rates to decline. Bond yields have actually come down, and therefore, efficient market hypothesis points towards the direction that rates are bound to come down. And more importantly, if the Nigerian government is issuing a euro bond shortly, the proceeds of those bonds are going to be used to pay off debt instruments, which means that the amount of debt available to buy, the assets to buy, will be reduced. So I think interest rates are likely to move in that direction. Okay. But you never know.
We need to take a look into Bismarck Rewane. We were talking about the monetary policy rate decision coming up next week, Monday and Tuesday. Let's just quickly wrap up with that. You've given your own argument. It's quite similar to what other economists have, but the CBN too, on its part, or the MPC, has been consistent in its own argument, its own side, on why it won't come down on the MPR.
Well, I'll come to the risks, right? But the important thing is, let us look at what has happened across the world. The European Union is responsible for 20% of world trade. They came down by 25 basis points in their last meeting and brought their prime rate down to 0.5%. 0.5%. I know the inflation rate there is about maybe 1.5 or 2%. Now, the other countries, Ghana has the highest rate. Ghana has 15% prime rate, and inflation is about 8.5%. Angola is 10%. South Africa kept its rate steady at 5%, and Uganda is at 12%. So, quite frankly, there's been a tendency and a bias towards lowering rates, but the risk that central banks in monetary policy look at anticipation and the future. The future is more important than the present. The inflation figures you have are historical. We expect that in April, inflation will go up from 8.6 to 9.2. That's our forecast. Okay. If that happens, and it's going to come out the day before the MPC meeting, 1. 2, there's the threat of oil revenue and oil prices, which has been very clear. If there's an oil price drop and begins to deplete our reserves, then if we have to adjust our exchange rate, it means that some of the international investors who have been dominating this market may move their money out, and that could affect the exchange rate and actually throw up certain risks. So the central bank is going to weigh the fiscal overdrive, the fear of reversal of hot money, and more importantly, the fact that anticipated inflation may be higher than historical inflation. Therefore, I'm saying it's not either or. It means the quantum of the change in direction, that is 25 basis points, maybe, or even if you don't touch the interest rate, you might actually reduce the cash reserve requirement, which in effect means that you put more liquidity in the system. It doesn't really mean that banks will lend. Banks lend based on their perception of risk. If the banks believe that the environment is still risky, even if you bring the prime rate to 0, they will not lend. What you want is stimulus as against contraction, because you have high unemployment, you have weak infrastructure, you have weak institutions, and you want to be competitive. So the Ministry of Finance and the Ministry of Investment want to create jobs, they want to create opportunities. The central bank wants to make sure that it is done within the context of a stable inflationary environment. That consensus, just like between the legislature and the executive, that kind of compromise between the fiscal authorities and the monetary policy authorities is necessary to keep this economy on an even keel.
No, but do you think that, yes, you put up a good, strong argument, but, then again, the central bank would do what, the MPC would do what it would want to do, but would you be surprised next week if the MPR remains at 12%?
I won't be shocked, but I'm saying that there's a slow return to rationality. I think sentiment and qualitative measures will give way to quantitative, numeric, and objective measures. I suspect that somewhere along the line that this return to rationality will happen. But it's a far-fetched notion, but miracles happen.
Miracles will happen now. Of course, fingers crossed on that.
Yes.
Well, I'm afraid we're going to have to leave it there for now. There's still one or two others that we could look at, but we're completely out of time. But thank you so much. Obviously, you remain bullish on the Nigerian economy going forward.
I remain cautiously optimistic.
Cautiously optimistic. Okay, I've forgotten your famous phrase. Well, thank you so much for sharing your thoughts, for coming on the program. I really do appreciate it.
Thank you.